Okay, good morning, everyone.
Good morning.
And welcome to the fourth webinar in the masterclass series on SEBI listing regulations. And today we are going to discuss one of the very important topics on relating to corporate governance requirements of subsidiary companies, Secretarial Audit and Secretarial Compliance Report. So today we have one eminent panelist, Ms. Manjuree Roy, with us, who will be giving her expert views during the progress of the presentation. And one of our partners, Ms. Aditi Patnaik, is going to make the presentation. Aditi is our secretarial audit in charge, and she takes care of about 60 to 70 secretarial audits as well as secretarial compliance reports. And she is having an expert knowledge as far as the secretarial audits and compliance reports are concerned. And she is going to discuss not only the legal provisions as far as the listing regulations are concerned, but at the same point of time, she's also going to discuss certain practical issues, what she was facing or she is facing, apart from other practicing company secretaries during the course of the audits. And at the same point of time, on the other side of the table, Ms. Manjuree Roy is going to also discuss about certain issues pertaining to secretarial audits and secretarial compliance reports. To briefly introduce today's panelist, Ms. Manjuree Roy is the company secretary and global head legal and compliance of Tega Industries Limited. For the benefit of the participants, Tega Industries is a listed company and is a global leader in designing and manufacturing of critical to operate consumables for the mining, mineral processing, and material handling industries. So she holds a bachelor degree in commerce from Osmania University and is a member of the Institute of Company Secretaries of India. She was previously associated with Lafarge Holcim Bangladesh and Lafarge Umayim Mining Private Limited for over 2 decades. And at the same point of time, I was privileged to meet Manjuree a few months before at the Goa convention of the Corporate Secretaries Conference. And in fact, my luck would have it, I attended that conference. Otherwise, I would have missed the opportunity to meet such a professional, which I'm privileged to. Thanks very much, Manjuree, for obliging us to join today's webinar.
Thank you, sir. It's my pleasure.
And myself as well as Bala. Thank you very much, Manjuree. Myself and Bala are going to be the panelists from, the in-house panelists. And Bala, you know that very well. Professor Balakrishnan is a company secretary having almost 4 decades of experience in secretarial compliance, and he has worked with Foseco India Limited and is a regular speaker at ICSI CCGRT, and he regularly contributes in various magazines, including Chartered Secretary of ICSI. And selflessly, he is disseminating his knowledge across the fraternity as well as the other professionals also. And by uploading his articles on the WhatsApps and several, the professionals are getting benefited, especially the budding company secretaries. As far as I am concerned, I don't need any introduction as such because most of you might be knowing me from time to time. So we thank all our panelists today and webinar and joining us in our knowledge sharing journey on behalf of the entire team of Mehta and Mehta. As we all know that National Convention is in progress and both Atulbhai as well as Deepthi are attending that, apart from some of our partners also. And I am sure that several of our participants too might be what's called as participating in today's national convention. That's why attendance I was expecting initially maybe a bit thin, but already I could see about almost 78 participants are there, which is quite encouraging. Now, I request Ms. Manjuree to give her introductory remarks on today's topic. Thereafter, I will add, and before inviting Aditi, I will also request thereafter Professor Balakrishnan to give his comments. Manjuree, your yes, please.
Thank you, Sudhakar, sir. It is indeed a pleasure and an honor to be among you all today. This, as I met you a few months back, and I mentioned that it is the series which Mehta and Mehta is doing and what you are doing is a very encouraging for all the company secretaries, whenever we have any doubts, whenever we have any guidance is required, we feel that with these series, you are guiding us personally. So with this, I would say that it's really an honor and privilege to be here today and being associated with this seminar. On the topic, I would say we discussed this topic of governance requirements related to subsidiaries of listed companies. Normally, when we are working, our attention is mainly to the listed companies. But as LODR is becoming so, I would say it is becoming one of the most critical things of a company secretary. Subsidiary companies also need equal attention. So with this topic today, we will come to know, and when we are preparing ourselves for the seminar also, we came to know so many new things which we thought we knew, but when we have to revisit them, we have learned a lot. So I think this will be a very interesting and a very educative seminar for all of us.
Thank you, Manjuree. And friends, as far as my views are concerned in today's topic, as we all know that whenever a listed entity is having subsidiaries, the financials of the subsidiary companies are to be consolidated with the listed entity. In view of that, SEBI felt that it is the responsibility of the listed entity to also ensure the corporate governance norms, whatever it is complying with, to get the same percolated down to its subsidiaries also. It is that is one of the reasons that why under Regulation 24, the listed entity is obligated to ensure certain corporate governance norms, whatever prescribed in respect to its subsidiary companies. Apart from the compliances, the secretarial audit report and the secretarial compliance reports are also made mandatory. In fact, as we all know that secretarial audit reports are applicable to all the listed entities under 204, but it may not be applicable to all the subsidiaries of the listed entity. So Uday Kotak committee observed that secretarial functions are very critical to efficient board functioning and has recommended that secretarial auditor may also be extended to the at least material unlisted subsidiaries of the listed entity. That means all the subsidiaries secretarial audit may not be mandatory under the listing regulations. As far as the material unlisted subsidiaries of the listed entity is concerned, though the secretarial audit is not mandatory under 204 of the Companies Act, but still they have to get secretarial audit conducted and submit its report to the listed entity, which has to attach the same together with its report in the annual report. Now, as far as the secretarial compliance report is concerned, several of us have the view that when the secretarial audit is there, why again another report, that is secretarial compliance report? In fact, if you go I'm sure that every one of you know the rationale for this, but just to give a recap and only for the benefit of the participants who are not aware of this, what is the rationale for introducing this secretarial compliance report? NSC has verified the data of 595 companies for the financial year 2015 and 2016, and this what's called as you can say a survey was conducted at that point of time, or a study was conducted in the year 2017, second half of 2017, and it has picked up certain companies, listed entities primarily, based on the market cap as well as the type of non-compliances what they are observed by both the stock exchanges. So it has picked up about 595 companies in 2015-16 financial year, and approximately another 1,000 companies in the year 2016-17. And it has observed that the secretarial audit is not very transparent. It doesn't tell anything about what was examined and what is the extent of compliance and non-compliance under different regulations applicable to the company. As we all know that as secretarial auditors, we have to give the report in the MR3. And in the MR3, in the same format, we have to give the report. And very few auditors have taken the liberty of reporting more than what MR3 is asking you to do that. But several auditors were confined like themselves, and because the auditees companies were also asking that why you have to go beyond MR3. So it was felt that by NSC while it was conducting the study that MR3 as such is not revealing anything. So they face that secretarial audit is not focusing on the very critical requirements of the listing regulations. And most of the secretarial auditors, as I was mentioning, that they prefer to adhere to the format suggested by the Companies Act only, because even in the listing regulations also, as far as the secretarial audit is concerned, they said that let there be not two forms, let it be the MR only, maybe, used for this purpose. In fact, the then SEBI chairman, Mr. Ajay Tyagi, in one of our own conferences, PCS conference, I think, Golden Jubilee conference, if I am not wrong, where he has attended that, he mentioned that based on this analysis conducted by the NSE in the year and submitted its report in February 2018, it was found rather disappointed to see that many secretarial auditors didn't report the non-compliances, penalties, or complaints of action taken events as pointed out by the stock exchanges. Because as again the same thing, in the MR3, there is no requirement to mention all these things. So many secretarial auditors have confined that their report only to MR3. So SEBI felt and they said that effective May 2021, they have introduced the secretarial compliance report. This report need not be published in the annual reports, but it is to be submitted to the stock exchanges within 60 days from the end of each financial year. This report talks more about the compliances as far as the listing regulations are concerned. So the orientation of this report is different to that of the secretarial audit report. So hence, we don't need to complain that when there is a secretarial audit, why again there is a secretarial compliance report, because the orientation of these two are entirely different. So as we know that in case of secretarial compliance report, you have to also give that what are the non-compliances, and in the next year's report, these non-compliances, how they have been addressed to, whether they have been complied with subsequently or not, that is to be also reported to. In addition to that, if SEBI has taken any action against the listed entity or its promoters or directors or the KMPs, that is also to be reported in the secretarial compliance report. Recently, this report was again further amended, and it has also now asking about the compliance of secretarial standards. In fact, right from 2016, when I became a member of this SSB, that point of time onwards, I used to say that secretarial standards are going to get its prominence over a period of time. I think now, apart from the regulators, we too have realized the benefits of the secretarial standards are concerned. Now, still, there are some people that they feel that secretarial standards are a kind of a second class, preference is given to that. The first preference is to listing a regulation, second preference is to Companies Act provisions, and third is to secretarial standards. Now, the secretarial, the PCS has to give comment about the compliance of secretarial standards in the secretarial compliance report. So this particular report may be taken as a feeder for the secretarial audit. And at the same point of time, this is applicable only to the listed entities, and it is not required to be given as far as the material subsidiaries are concerned. Material subsidiaries, only secretarial audits are required. They don't need to give the secretarial compliance report. I think I have given enough what's called introductory remarks. Why I have given it, almost I have taken about 5 to 7 minutes, is this particular controversy that why two reports are required is there for since the time, I think if I'm not wrong, SCR was introduced in the year 2019. Am I correct, Aditi? 2019 or 2020, this was introduced. Right from the time for the last 4 5 years, this controversy is going that. And at the same point of time, that the amount of seriousness what is to be given to secretarial compliance report is not still being given, and the PCS are facing some kind of a difficulty. So today both Aditi as well as Manjuree are going to discuss about this from the two sides of the table, and myself and Bala will pitch in wherever we require to. Now I request Professor Balakrishnan also to give his introductory remarks, and thereafter Aditi will take over. Thank you.
Good morning to
Yes,
all of
Bala
you.
sir.
Good morning to all of you. I, as usual, have a great pleasure in welcoming you all on my own behalf and also on behalf of Mehta and Mehta. Sudhakar started with it. The score has now gone up to 125 people. I can see that definitely shows the importance of this particular topic. And as Sudhakar said clearly,
and this is despite the national convention going on.
Yeah,
And several participants might be attending that also.
that is right. And today we actually have really a very eminent presenter who is virtually holding a practical experience of conducting the secretarial audit for many companies, listed, unlisted companies, material subsidiary companies, very vast experience. And we also have the other side representing the company, that is, we have auditor and auditee. Generally, it is said two professionals never agree on anything except one thing, they agree for the disagreement. So there are a lot of issues between the two people. What secretarial auditor is looking forward, what the company secretary would like to state in the report or not otherwise to report, what he wants to share, what he doesn't want to share, all these issues are there. Because the problem with the secretarial auditor is, how do I certify without verifying the facts? There are many examples which can be actually given. One of the glaring example was actually regarding to the meeting held by the independent directors. I think if you all recall, many of you would have been present in the last 2-3 seminars. And this was one of the matter which was very elaborately discussed. I think our Sudhakar has actually taken very clearly has given. The company secretaries are not party to the independent directors meeting. He is not acting as a company secretary. He is not related to have the minutes of the meeting very clearly. So minutes of the meeting of the independent director is not going to be available. It cannot be demanded. That is one thing. Second thing is that how do the PCS certify? He very clearly said if the attendance register is signed by the director who were present in the meeting, that is the conclusive evidence of meeting has been conducted. In addition to agenda item has been issued and minutes, and the notice has been circulated, etc. The other thing and all. Based on that, they are allowed to certify that he very clearly says this is one of the things. Even today, many people keep demanding, no, we want to see the minutes, we want to see the things and all these things, which is actually unwanted. Similarly, the making the entries in the register, etc. and all these things within the time and etc. within 7 days, within 10 days, etc. on the requirement, how do I check it? See, the thing is, mostly we are all being a professional. We have to believe each other, trust and believe. Once the document is presented to you, if it is updated to you, there is no doubt there is something would have gone wrong back or something. So we have to go by that to the larger extent. And another thing is there, as he said very clearly, the secretarial audit and the secretarial compliance report. What regulator now looking, they are looking little more beyond the secretarial audit report in terms of the assurance from the company in the secretarial compliance report. Because what they are looking forward in the secretarial compliance report is, what is the action arising out of the non-compliances which has happened in the past? What is the action taken by the company on this issue? What is the compliance status today? And again, what is happening is on that, what is the management view or what is the observation view remarked by the people? These are all the things which you are looking for. So frankly speaking, the secretarial audit report pertains only for the preceding year, what is issued by the PCS. But where the secretarial compliance report goes much beyond the preceding years, the past non-compliances, which is specifically required to be addressed. That is one thing which is there between the reports. So in which case, it cannot be a duplicated. There is a separate exercise has to be undertaken for certifying the secretarial compliance certificate. And another thing is there, if you actually seen the format which is issued by the SEBI, very clearly the first point itself is compliance relating to secretarial standard 1 and 2, which is actually mandatory. So they have to actually state what is the secretarial standard compliances. They have to say any non-compliances. They have to say, first thing they have to say compliance, whether they are compliant or non-compliant. If there are any contravention, any non-compliances, etc., then again that has to be actually stated. And arising out of that, if there are any violation which has taken place, any fine penalties are levied, that is to be indicated. So all these details which are actually going through. Any action is pending, what is the action is taken, what is the action initiated by the company, what is the complaint stated, all those things which are required to be given. And not only that, it has to, you know, to address everything. That means you start with the secretarial standard complaints, you talk about it. You talk about the various policies, circular guidelines issued by the SEBI, etc., and other thing and all. Then again, you talk about website, the maintenance of the website, whatever the various disclosure, the updation. Because website normally there are many policies which are actually issued, but the thing is which are required to be updated from time to time. The regular maintenance, regular review, which are actually required, they are also specifically to address in this particular report. And again, it also talks about the disqualification of the directors. Specifically, to comment on the disqualification of the directors. Again, going through related parties. And again, it is talking about the preservation of the documents. So many other things which are actually looking into in the Secretarial Compliance Report. It is not the duplication of the Secretarial Audit Report or Secretarial Compliance Report. That is one thing very clear. But many times what happens when I talk to the many practicing professionals also, they also face the same problem when they go to the organization for this certificate. The employee, secretary, or the management, they say, oh, what is there? You already issued the secretarial certificate, secretarial audit report. So based on that, you can issue this report. That is the standard thing which people seem to be talking in many organizations, which is one of the concern about the practical aspects. And I think Aditi will address definitely this, how she is facing, what is that, how she is actually informing the importance, what is required, etc. The other thing and all. One thing on the other side, we have the Manjuree Roy who also speak on that. That is one thing. And second thing is now today, the way regulators are looking forward is more of the transparent and disclosure. There is nothing which you can actually disclose half or you can hide or something like that. That is not the case. Everything is required to be disclosed. That is one thing. And more or less, very recently in one of the seminar also, we did discuss that SEBI has actually come out in the similar line with the Companies Act for imposing the penalty for the non-compliances, more or less on the continuing offense which is levied by the Companies Act. They have also come out. There are a lot of things which SEBI looking after the non-compliances very seriously, and they have been taking action. And the company secretaries need to be very, very careful. In fact, company secretaries both, I would say that for the employees company secretary as well as the practicing company secretary, both they have to be very, very careful. That is number one. Number two, as on today, if you look at it as Sudhakar puts it, Secretarial Audit Report forwarded the same under the SEBI regulation under the Companies Act, because the SEBI regulations have actually adopted and accepted what is prescribed on the Companies Act. There is no change. So naturally, it goes under the section 204 of the Companies Act, the Secretarial Audit Report. But there have been a lot of non-compliances, either from the company side or from the practicing company secretary side also on these issues. So the MCA regulators, though they are not having a jurisdiction over the SEBI regulation, but they are definitely having the jurisdiction over the company law. And they have taken a lot of issues. And if you look at the recent orders which are actually coming out from the regulator, they are not only referring the secretarial standards, they are also referring the guidance issued by the secretarial standard. One of the order which I have seen very recently, they have actually referred the revised guidance, latest revised guidance note issued by the company secretary. They have category held the responsible, the secretarial auditor in one of the related party transactions for the non-disclosure. He has been taken for the task. He has been actually penalized. So to that extent, regulators are very much concerned about it. We cannot take it lightly that saying, as Sudhakar puts it, it's a secretarial standard is the substandard regulation and there is nothing like that. It is not like that, because secretarial standard is a very, very important thing which actually talks about it. So much efforts have been put in by the secretarial standard board on that, and they have been reviewing it. They have been bringing the revised guidance notes, etc., which is very helpful for our profession. We have to bound by that. There is no doubt about it. I have the great hats off to the secretarial standard board for their doing the extraordinary job on this. So this is going to be a very interesting session for all of us. And there are a lot of things to learn, a lot of things to know the practical aspects. We will be having an opportunity to hear both the sides from the auditee and the auditor. So I am also eagerly looking forward, like all of you. So let us start with the presentation. Let us move on. And as usual, you can put up your doubts and queries, etc. on the chat box. We will take it then and there. If there are anybody who wants to talk, they can raise their hand. We can actually talk also. Sudhakar, excellent. 140 close up. Yeah. Go ahead with it, Aditi.
A very good morning to all the participants. Thank you, Sudhakar sir. Thank you, Bala sir, for giving us a very good introduction to the topic. And I, on behalf of Mehta and Mehta, also thank Manjuree to be a part of this session. So I welcome all of you once again to the masterclass on SEBI LODR Part 4. So today's topic of deliberation is corporate governance requirements of subsidiary companies, Secretarial Audit and Secretarial Compliance Report. So Regulation 24 of the SEBI LODR, Sub-Regulation 1 reads as follows. At least one independent director on the board of directors of the listed company shall be a director on the board of directors of an unlisted material subsidiary, whether incorporated in India or not. So for the purpose of this regulation, there are two things that needs to be considered. First is the term subsidiary has been defined under the Companies Act. So whenever a company is holding more than 51% of the total voting rights or has a control over the composition of the board, it qualifies to be a subsidiary. And further, to understand the term material subsidiary. So SEBI guidelines, SEBI regulations have actually used the term material under two regulations. So one is under 16(1)(c) and one is under Regulation 24. So the Regulation 24 is very specific when it comes to the definition of material subsidiary. So it is like a material subsidiary for the purpose of this provision is when a subsidiary whose net worth or the income exceeds 20% of the consolidated income or net worth, respectively, of the listed entity and its subsidiaries in the immediately preceding accounting year. So for the purpose of this regulation, it is pertinent to understand that the trigger point here is crossing a percentage of more than 20% of the consolidated income or net worth. So if a subsidiary is contributing to more than 20% of the income or net worth of the listed company along with all its subsidiaries, then it qualifies to become a material subsidiary. And for the purpose of this calculation, we will have to consider the financials or the figures as on the immediately preceding accounting year. So let us take a few examples just to understand how does a entity qualify to be a material subsidiary. Supposedly, XYZ is a subsidiary of ABC Limited, and in the financial year 2022-23, the net worth of XYZ Limited happens to be 190 CR, and the consolidated net worth of ABC Limited is 800 CR. So when we calculate the consolidated net worth of ABC Limited, it is the net worth of the subsidiary is contributing to more than 20% of the consolidated net worth. Therefore, XYZ shall be considered as a material subsidiary of ABC Limited. Now moving on to a next example where we have a negative net worth. We take the same example of the figures. Supposedly, XYZ is having a negative net worth of 190 CR and ABC is also having a negative net worth of 800 CR. So what we need to understand here in this regulation is irrespective of a positive or a negative net worth, if a subsidiary is contributing to more than 20% of that consolidated figure, so it happens to be or qualifies to be a material unlisted subsidiary. So irrespective of the negative net worth, XYZ continues to be considered as a material subsidiary of the listed entity. Now further going to another example where there is a positive as well as a negative net worth. So here the net worth of XYZ Limited is 120 crore and the consolidated net worth of ABC Limited is running into negative figures, but it is negative 800 crores. So will the subsidiary be still considered as a material subsidiary of ABC Limited? So even though it is a positive contribution that it is making, so what we have to understand here is, even though the consolidated figure is running into a negative figure, and the subsidiary company is making a positive contribution, but if it is not crossing that limit of 20%, it will not be considered as a material subsidiary. So even though the final figures are negative and there is a positive contribution from the subsidiaries' financials, still it is less than 20%, and therefore it shall not be considered as a material subsidiary of ABC Limited. Now moving forward, we go to Regulation 24, Sub-Regulation 2, which is stating that the audit committee of the listed entity shall also review the financials, and in particular the investments which is being made by the unlisted subsidiary. So here the term material is not used, so it is only an unlisted subsidiary. So when when a listed company is investing in a subsidiary, it becomes equally important for the board of directors of the listed company to have an overall idea about how the operations of the listed of the subsidiary company is taking place. Therefore, audit committee, the stress on audit committee has been made, because in the last LODR classes also we have kind of stressed upon the functions that an audit committee performs. Therefore, audit committee constitutes of people who have financial background. Therefore, when they review the financial statements, it is like when they are reviewing the financial statements, it is the audit committee is able to get an entire background of the operations of the subsidiary company, of the revenue generation, of maybe the investment policies or the profitability made by the subsidiary, the borrowings that has been done. So ultimately, because ultimately any changes which takes place in the financials of the subsidiary is going to have a direct impact on the financials of the parent company, which is the listed entity, because there is a consolidation. Therefore, it becomes very important for the audit committee to go through the financials of the of the unlisted subsidiary as well. Now, the next sub-regulation, that is sub-regulation 3 of Regulation 24, it talks about the minutes of the meeting of the board of directors of unlisted subsidiary shall be placed at the meeting of the board of directors of the listed entity. So this is again a very important point, because as we all know, minutes are kind of the official recordings or the proceedings that takes place in a meeting. So it is like we in the board of directors of the listed entity, in order to understand the board processes, the decision making flow in the unlisted subsidiary, it becomes very important for them to even understand the kind of procedures which is being followed in the unlisted subsidiary. So noting of the minutes can be, in a way, it can be one of the ways through which the board of the listed company can have an idea of how the unlisted subsidiary is functioning.
So Aditi, if I may, I would like to add out here that it is not always important the signed minutes which have to be placed. Because what happens normally, if it's an unlisted subsidiary, their meetings have to be held before the listed companies meetings are held. So there will be a time lag before which the minutes can be finalized and placed. So we need to have a very firm calendar when the unlisted subsidiaries are having their minutes, by which days, in how many days we need to close those minutes, so that a right picture can be placed for the listed company. It is, and since the regulation is very open, it has not given a time limit which periods minutes have to be placed, whether it's the last quarters or the half yearly results. So there is no clarity. So we have to have a very good schedule to ensure that when the meeting is happening, the latest minutes are there with them, the latest information is placed before the board. So this is very important for governance point of view and disclosures to the directors, that they have complete information on what is happening in the unlisted subsidiaries. And here I would say, whether it is material subsidiary or a non-material subsidiary, that is not, there is no differentiation. So if you have got 20 subsidiaries, you have to ensure that all those subsidiaries, and even if they are step down subsidiaries, you have to ensure that all those minutes are always available with us so that they can be placed. On a practical aspect, I know it becomes very challenging, but if your minutes are not signed off, and especially if you have board members who are there, who are not your main board members, then you can have the draft minutes at least placed, so that if any director wants to review and has any queries, we can do. So this, for me, this is one of the most critical aspects which has to be looked at under this regulation.
To add
Yeah,
to
just to,
Manjuree, I would like to ask one thing. Yeah, what you rightly said, it is okay that you can have a meticulous planning, you can have the board meeting of the subsidiary plant, etc. All those things can be done so long as we are actually, the subsidiaries are situated in India. But this also covers the subsidiary which is situated outside India. So
Yes,
that
sir.
is not within your scope actually.
Sir, actually, when the subsidiaries which are not situated in India, their accounts are also getting reviewed by us. So those accounts also have to be signed off to be placed with the main company's board. So it's not that,
I think we lost your voice.
Am I
yeah,
audible?
you're audible, Manjuree. You're very clear.
So the thing is, if a subsidiary is from outside India, so when we are consolidating the Indian listed companies' accounts, these subsidiaries also have to, even if it's the quarterly accounts, they need to present their, we need to take up their figures. So if you're taking up anything from them, you have to have it approved by their board and then brought to the main board. So at any point of time, any figures which are going to come from the subsidiary have to be signed off by its board, and then only the audit committee will take them as signed accounts. So even if there is no requirement in their Companies Act, which we face also on very practical situations, it might not be that country's regulation which might require, but since we require it in India, we will have to ask. And this is a situation which we have seen even for when we are in an Indian company which is a subsidiary of a foreign holding company. If you are in any other geography, their accounts will only get closed if we from the India are able to give them our audited accounts or unaudited accounts. So our board has to review it and then give it. So the cycle is a continuous cycle, whether when we are a listed company in India or we are a part of a company which is listed outside India also. So on very practical aspects, minutes of the subsidiary companies have actually become, even if we in India take 3 to 4 days to finalize our minutes, there sometimes it has to be taken that their minutes have to be closed within 24 hours so that they can be reviewed and then placed to the listed companies board.
I think Sudhakar wants to add something.
Yeah, I fully agree with what Manjuree says, that in fact, though there is no timelines prescribed to place which period minutes are to be placed before the listed entity, but I can always say that as per the Companies Act, within 30 days, the minutes are to be finalized. So, though they are not signed, as she rightly has mentioned it, the moment the 30 days period is over, you are supposed to finalize the minutes. Only thing is, at the next board meeting, you may get it signed. So all those minutes are to be placed before the listed entity as and when the board meeting of the listed entity is taking place. Because one of the what's called as the responsibilities of the board of directors is to ensure that the subsidiary companies are complying with the corporate governance norms apart from the performance of the subsidiaries are concerned. So while you are placing it before the board, normal practice every one of us is following is that to attach the what's called a subsidiary minutes together with the agenda, and one of the normal agenda items is to review the minutes of the subsidiary companies. If you are not able to attach to the agenda, maybe we will circulate it separately as a binder or whatever you may concern. Always it is a good practice to summarize the minutes and to bring the significant items in the particular minutes of the meetings, because by merely dumping everything on the board of directors is not a good company secretary's job. It is always advisable to summarize the significant decisions company wise. Apart from that, full minutes are also to be placed before the board.
Yeah, only problem, as I said, also it will only, at times creates a problem with the subsidiary situated in the overseas. Because many a time what happens is, as she rightly said, their law does not govern that. Our law governs. There is some difficulty which is being experienced, which I also face sometimes. So that anyway, we'll have to actually educate them what is the law requirement, what is the thing and all we'll have to do. That is the thing. Yeah.
So sometimes even the subsidiary minutes are in their local language. So the professional who is out there has now got accustomed that when it is being made in the local language, at the site, the English is also done, so that when we are placing it, we are actually placing both the languages which are signed off and have to be there. So there are companies where we need to ensure that even though local language is there, it is converted and sent to us. So that is one. And if I may add to this, there are in certain countries, the requirement is that even a presentation has to be made on whatever are the affairs of the subsidiary companies. So certain countries which are also following the listing regulations like us, we have had a situation where we have had to ensure that all the subsidiaries have made presentations, even though even if it might be a 2-pager, they have made the presentations and circulated it along with the minutes, so that the listed company is totally aware of whatever is happening.
Aditi, there is one chat has come. It is actually addressed to you. The threshold of the material subsidy is 10% contribution to the consolidated income token net worth since the last 4 years instead of the 20% as the total as explained in the example in your presentation, please.
So which one, sir?
Here they are saying the threshold of the material subsidy is 10% contribution to the consolidated income stock net worth the last 4 years instead of 20%.
No, sir. So 20% is only for the purpose of sub-regulation 1. That is 24. Regulation 24, sub-regulation 1. That is, if I may go back to the...
yeah, please go
yes,
back.
sir. Just a minute, sir. I'll go back to it. So this one, if we go through this regulation once again, it is regulation 24, sub-regulation 1. It is only for the purpose of having the independent director of the listed entity on the board of the unlisted material subsidiary. For as I previously also told, when we look at the SEBI regulations, there are 2 regulations which is defining the materiality criteria. One is 16(1)(c), which is obviously saying the 10%. The other one is the material subsidiary only for the purpose of having the independent directors on the board of the unlisted subsidiary. So that for that purpose itself, it is 20% only. For rest of the criteria remains a 10% only.
Okay, probably I think.
Yeah, that is the correct view also.
Yeah.
So
I think
I
probably.
have
Yeah.
I have a question on this, which is always this thing, that this 20%, once you have appointed an independent director, and in the next financial year, it is not having this 20%, it goes down. What do? Once you have appointed, I think you will have to continue with that independent director on that board. You cannot say just because the 20% net worth is not there in this year, because this is a group level which you are looking at from the listed company. So if in the next year some subsidiary has not done well or somebody else has done it, and because of which your figures have inflated or have gone up. So what do? You can't remove the independent director. So once you have appointed somebody, that person will continue to be on that board, whether 20% is met or not.
So I would quote it in this way, that it is obviously a good corporate governance, because usually how it happens is once this once this provision is getting triggered, then you continue to fall under that only. So like you said, like appointing someone on the board and asking them, removing them just because we are not reaching out to that criteria doesn't, obviously it is not solving the purpose. So it is kind of, once we reach that criteria, it is obviously a good corporate governance practice to continue having them on the board.
And if that independent director retires, or so the new one who comes will have to be there. So these are very practical things which we have to start thinking about, because once we have those in our thought processes, then suppose it is not a person who gets important, it is that subsidiary will always need to have an independent director there. So where, if this Mr. X goes out, when Mr. Y is coming in as another one, do we still appoint or not? So these are just thoughts which keep on coming to us when we are looking at it on a very practical aspects.
There's one more question which has actually come here. Is it necessary that the subsidiaries AGM approving the annual account should be held before the parents AGM approving the consolidated accounts?
Yes. There is no doubt about that.
Yeah,
So
it has to be.
there is a consolidated financials which is placed for adoption in the AGM of the parent company.
Yeah.
So until and unless we have the financials of the subsidiary, it is not possible for
Signed off.
Yes, it is not possible for the holding company to consolidate its accounts. So we need to have the final figures, or
That is right.
signed
You're right.
figures for that.
Yeah.
The only thing is they have to get their accounts audited before consolidation takes place. The AGM of subsidiary companies need not be held before the AGM of the listed entity. They need not be adopted for the purpose of consolidation. They need not be adopted in the respective subsidiary company AGMs. And the only thing is that the auditor, the accounts are to be audited, and then thereafter the consolidation can take place. As far as the listed company's AGM is concerned, that can be held before the subsidiary company AGMs are concerned. There is no barriers at that.
Yeah, correct. Audited accounts need to be in place. That is right. Yeah. One hour.
Yes, I go ahead, because we are already losing time, because there are it is already 11:50 it is.
Okay, we move on. We'll take the question later. Yeah.
Okay, sir. So now moving on to Regulation 24, Sub-Regulation 4, which is saying that the management of the unlisted subsidiary shall periodically bring to the notice of the Board of Directors of the listed entity a statement of all the significant transactions and arrangements entered into by the unlisted subsidiary. So again, there are a few questions to answer here. First is, what should be the periodicity? How do we identify the significant transactions, and who can be the management for the listed entity? So in the previous slide also, as we discussed, there was no specific timeline mentioned for noting of the minutes. So even for this particular regulation, there is no specific period that has been mentioned, but significant transaction has been very clearly defined under the regulation. So significant transactions, if we see it is like any individual transaction or arrangement which is exceeding, or it might exceed to more than 10% of the total revenue, or the total expenses, or total assets, or total liabilities. So the transaction or arrangement can be either of it. So either of it, as the case may be, if it is exceeding the threshold limit of 10% of that unlisted subsidiary in the immediately preceding accounting year, then the same has to be noted by the Board of Directors of the listed entity. Now, this is again a very important, relevant regulation, Sub-Regulation 5. And here we have to again focus that the word material subsidiary has been used. For the previous two regulation, it was only subsidiary, and for this, it is again a material subsidiary. And for the purpose of this regulation, it is 10%. So a listed entity shall not dispose of shares in its material subsidiary, which will result in the reduction of its shareholding, either on its own or together with other subsidiaries, to less than 50%, or cease the exercise of control over the subsidiary without passing a special resolution in the general meeting. So only if the shareholders of the parent listed entity is giving the approval of going for a reduction of the shareholding, then only that can happen. Otherwise, apart from that, the listed entity on its own accord cannot reduce its shareholding beyond 50% or cease to have the control. So we have two exceptions to this. So under these two circumstances, only the shareholders' approval does not become mandatory. So first is if the listed company is going for a reduction of its shareholding under a scheme of arrangement which is duly approved by the court of law or the tribunal, or in case a resolution plan has been approved under the section 31 of the IBC, and a subsequent intimation to the stock exchange has been made within the timelines. So only under these two circumstances, the prior approval of shareholders is not required. Otherwise, in order to reduce the shareholding, we will have to go to the shareholders. Now, sub-regulation 6 talks about when the listed entity is wanting to dispose of or sell or lease the assets of the material subsidiary, and those are amounting in aggregate to more than 20% during a financial year, then also a prior approval of the shareholders becomes mandatory. So whenever there is a decision in the listed company for a disposal which is amounting to more than 20%, then it is mandatory for the listed company to first go to their shareholders, take the approval by way of a special resolution, and then only they can dispose the assets of the material subsidiary. Then there is again the exception to this sub-regulation as well. So the exception stands same as the previous one. If there is a scheme of arrangement or which has been duly approved by the court or the tribunal, or a resolution plan has been approved by the IBC, then under intimation has been made. So under these two circumstances, the prior approval of the shareholders will not be required. Now, this is a very interesting sub-regulation, that is, it is talking about where a listed entity has a listed subsidiary, so which is itself a holding company, then the provisions of this regulations shall apply to the listed subsidiary insofar as its subsidiaries are concerned. So what we have to focus on this very provision is that for all the previous sub-regulations, we were talking about unlisted subsidiaries. So by virtue of it being an unlisted subsidiary, the listed company was responsible. But here, supposedly we take an example. ABC Limited is the parent holding company and it is having 8 subsidiaries. So out of the 8 subsidiaries, ABC Limited is the listed subsidiary of XYZ Limited. Now further, if ABC Limited is having subsidiaries, then the ABC Limited is bound to take note of the minutes of the unlisted subsidiaries. The audit committee of ABC Limited has to review the financials. So all the provisions that we have discussed so far of Regulation 24 becomes applicable to that listed subsidiary. So now just to give just to sum up the Regulation 24. So it is like at least one independent director of listed entity shall be a director on the board of the unlisted material subsidiary. Audit committee shall review the financials, especially the investment made by the unlisted subsidiary. Minutes of the board meeting of unlisted subsidiary shall be placed at the meeting of the board of the listed entity. All significant transaction which is crossing the threshold of 10% has to be intimated to the board of the listed entity, and disposal of shares below 50% or the selling or disposing of assets more than 20% will have to require the prior approval of the shareholders, or else it can be done through the two exceptions. Now, a very common doubt which usually might rise in the minds of the audience is that Regulation 24 is talking about material subsidiary in certain places and only subsidiary in certain places. So if we refer to the FAQs in the ICSI also, which has been given, so there it is very clear that whichever regulation is reading as material, it has to be considered as material. Whichever is only unlisted subsidiary, then for that purpose, it will be read as only unlisted subsidiary. Now moving forward to Regulation 24A, which is Secretarial Audit and Secretarial Compliance Report. So now Secretarial Audit, as per Regulation 24A, Secretarial Audit shall be undertaken by every listed company and its material unlisted subsidiaries which are incorporated in India. And a Secretarial Audit report is given by a PCS shall be annexed with the annual report of the company. So let us understand one thing here. When we are discussing this regulation, we can go back to Section 204 of the Companies Act. So Companies Act also mandates certain classes of companies which has to mandatorily undergo a secretarial audit. So when we refer to these material unlisted subsidiaries, so it is contributing to more than 10% of the consolidated income or the turnover of the listed entity. Not necessarily that this material unlisted subsidiary will fall under the criteria of Section 204. But even if it is not having a borrowing or it is not having those capital, that is paid up capital and turnover under 204, and it is falling under 24A, then that entity is mandatorily required to undergo a secretarial audit. Then it is another very important thing that we need to understand here is that since the audit is not getting triggered due to Companies Act, the Companies Act provisions does not get applicable to the unlisted subsidiary company here. For example, even if there is a secretarial audit report issued to the material unlisted subsidiary, it need not necessarily file with the ROC along with the director's report, because this is something which is germinating purely out of the SEBI regulations. Hence, the ROC or the Companies Act is not coming into picture. And similarly, when this audit report is given by a PCS, it shall be annexed with the annual report of the company. Now coming to the Secretarial Compliance Report. What is it's saying that every listed entity shall submit a Secretarial Compliance Report in the specified format to the stock exchange within 60 days from the end of each financial year. So I think a lot have already been discussed about why is there a need of the Secretarial Compliance Report even when there is a secretarial audit mandated, and we have deliberated quite for some time on that. So now we will move ahead. So going for the secretarial audit report format, when a PCS is conducting a secretarial audit, so let us understand a few points here. It is, again, there are categories of companies for which the audits are conducted. So it can be a listed company, it can be a public company, it can be a private company. So according to the category in which the company is falling, so we will have to look at all the regulations which has been pre-defined by the MCA or by the Companies Act and the specific format. So there is the Companies Act, Securities Contract Act, Depositories Act. For the listed companies, all the SEBI regulations, whichever becomes applicable to them during the course of audit, those have to be kept open and the rest can be struck off. Now we come to the very important part, that is the point number 6. That is, we will have to mention all the other laws that is specifically applicable to the company. So here we are trying to focus on the sector specific or the industry specific law. So basically here the responsibility is both on the shoulders of the management or the auditee company as well as the PCS who is conducting the audit. because every company needs to undertake a thorough analysis of the laws that is getting applicable to it, and then they have to ensure a timely compliance of that. So during the course of audit, what is to be done is probably the auditee company and the auditor can get into a meeting wherein the different laws which is applicable can be figured out, it can be investigated upon, and then the specific compliances of those laws can be checked upon. But one very important thing again to focus here is that as a PCS, we should not take it on the face value of what is being given to us from the auditee side. Supposedly, there is a list of 10 laws which is given to us by the auditee company. As an auditor, we have a separate responsibility attached to find out actually what are the laws which is applicable to the company. So this as a PCS, we have certain documents on which we can rely upon. The most important of it being the memorandum of association. So when we go through a memorandum of association of a company, the object clause is very, very particular as to what are the objects that a company is trying to pursue during its course of business. So when we go through that, we are able to understand the basic sector or the industry into which the company is falling. Then again, if we go see the kind of financial information that is available, probably the balance sheet or the P&L account which we have of the company. So there also we can see from where the revenue is getting generated. So as a PCS, we can rely on these documents to understand the nature of business. So it might so happen that companies might have a single line of business. So if they have a single line of business, then the sector specific laws can be identified very easily. If there are multiple businesses which is being done, so we will have to first understand what is the kind of income contribution or the revenue contribution that each of the activities is doing. And then accordingly, those activities have to be focused upon. So basically, this is a joint kind of a activity between the auditee company and the auditor, wherein the laws are actually identified and then the requisite compliances are checked upon.
Aditi, I would like to add only one thing here, that if you see in this report, in the MR3 Secretarial Auditor is giving a report that we have also examined the compliance with the applicable clauses of the following. That is secretarial standards issued by ICSI. Now, of late, if you observe, the registrar of companies is pointing out several companies that they are not complying with the SS1 as well as SS2. Now, wherever the cases, the secretarial auditor has given a clean sheet, that he has given a clean report in the MR3, and subsequently the regulator observed that secretarial standards are not complied with. At the same point of time, along with the secretarial audits, secretarial standard not compliance, he may take the company to task, as well as the secretarial auditor for giving a wrong reporting also. So the company secretaries have to be very careful while they are certifying that about the compliances, whether it is the listing regulations or whether it is secretarial standards are concerned. Yeah, go ahead.
So Aditi, I would just like to add on what you said on point number 6. Is that yes, every company has to also, every listed company, we need to place before our audit committee and the board the list of compliances, status of compliances. And I feel that that is a very right document when we share it with our practicing company secretaries or when they're doing their audit, so that, they have, because everything you cannot, there will be laws while we are doing the Factories Act, there'll be boiler, there'll be Rubber Act, there'll be so many acts which are becoming applicable, which we might not, as you might not have the details about. But when we have to report the same compliances to the board, and if we share it with the company secretaries who are doing the audit, then it becomes very easy. But at the same time, you cannot always depend always for everything on the company. We also look on the guidance, so that everything it's a two-way communication here too.
Yeah, in fact, Mr. Manjuree, I would like to say that especially the company secretaries who are in service, because the amount of responsibilities what have been entrusted upon them as key managerial person these days, it is always advisable that they have to have a strong secretarial auditor with them, so that the strong secretarial auditor is going to insulate the company secretary who is the KMP from his responsibilities. So one should not take audit as in a negative way only, and auditor is going to trouble me. So that let me have the soft auditor so that he will not ask me anything and he will not trouble me anything. And at the same point of time, in fact, let me also say that several times it may so happen when we are appointing the secretarial auditor, if I am in the company, I should not think that I am doing a kind of an what's called as I'm giving an obligation and okay by appointing him. It is not so. You need a secretarial auditor, so you are appointing. That is what the company secretaries who are in service have to know. At the same point of time, they too have to realize that the secretarial auditor equally having his own responsibilities and accountabilities towards the regulator as well as towards the institute. So wherever they have to say that if it is imperative for them to qualify the report or to make adverse observations and all those things, according to me, the company secretaries in service, they should not put over pressure on the secretarial auditor to compromise. Because if not today, tomorrow, if not tomorrow, day after, certainly if any non-compliances, especially major non-compliances are there, they will come out. Not necessarily the regulator has to take the action immediately. He may take the action down the line 2 years after also. So better always to have as strong a secretarial auditor as possible. And if that secretarial auditor is troubling your department, so you should be happy that yes, he is doing his job properly. Though sometimes it may easy to say and it is difficult, but at least till the time I was working in Reliance, we used to have the same norm. Wherever and whenever we were appointing the people, we used to always see that who are the people do the appropriate and proper secretarial audit without any kind of compromise.
In fact, Sudhakar, when we had actually gone for all the applicable laws to the company for the first time, the board has actually asked, do you have a list of all the applicable laws with you? Obviously, I have actually generated one. At that particular point in time, we were a medium-sized chemical manufactured company situated around 2 locations. I have identified something about 85 laws in one location and 87 laws in the other locations. And I played to them, these are the identified laws which are applicable to our company. The next question asked by the board of directors is that the 100% laws which are applicable to me. I said, sir, to the best of my knowledge, I have generated this. I am not very sure whether it is 100% or not, maybe something. I think we need to take some expert to run through the check. That is what I actually suggested. Ultimately, we have actually engaged an outside expert, especially a practicing company secretary. And we have told them, you visit this location, you go through, you find out whatever the things are, we do. What has happened is the final outcome of that is 3 more laws, which we were not aware at all, because due to the specific, because one of the unit was situated in a village where some panchayat related compliances were applicable in that area, which we were not at all aware at all, we never knew also. That actually came out. Another requirement which came out was in respect of the inside own power generations. There was a particular thing which was required to be submitted periodically. What is the number of units of the power generation, some cess amount is to be paid, etc. and other thing and all. That also actually came out. So really speaking, as you rightly said, that we are all routinely carrying out the job, etc. Something we may tend to miss out. So we cannot just look at lightly. We'll have to take the expert answers wherever required, because I have a great respect to the practicing people, because they have the vast experience since they are dealing with the multiple different variety of the industry, etc. They are really helpful in assist. We should actually look upon they are complementing to our job rather than, they are trying to find the fault and trying the thing. That should not be the case actually.
In fact, we used to have a practice that whenever the compliance officer is placing the compliance certificate before the board, along with the compliance certificate, we also used to give the applicable laws to the company. How many laws are there and which are the laws applicable to that, so that the directors have an idea that how many laws are applicable to the listed entity as such. And I'm sure that several good companies might be following the same practice.
Yeah, that is true. That is true.
Yes, Aditi.
Yes, sir. So obviously, as is there in the report, we have to report the specific non-compliances or observations or the audit qualifications. So I think we have deliberated enough on that, because since the regulators, in one line, if I put it, since the regulators are putting the faith in us as auditors, and the company secretaries who are in employment as compliance officers, so it is a joint venture kind of, we can say, to march towards governance practices.
Well said, well said.
Just a moment, I'm not able to move the screen. It's not going. Yes, sir. So towards the end of the report, we will have to report about any specific activities which has had a kind of effect on the company's affairs. So something which during the course of audit, if we feel has had a impact on the financials or the company's affairs. For example, it might be a rights issue or a preferential issue or major decisions which are taken by the members. So anything that we come across during the course of audit, that has to be it forms a part of the MR3. So now moving on to the annual secretary.
So Aditi, before 1 minute, before you go for this annual compliance certificate, also please dwell upon this management representation letter, which the PCS always asks the company's secretaries. Okay. So what sort of a management representation you require? Sometimes the company secretary in service always feel that they're asking more than what they require. So both you as auditor and Manjuree as auditee, both are there. Why can't we discuss about that for about 3 to 4 minutes on that aspect also?
Right, sir, very right, sir. So, so basically, management representation letter is kind of a representation that we as auditors seek from the management. That is very right that often we do come across situations wherein, the auditee company is like, why do you need to take all those representations? Because you've already audited the entire set of documents, or like whatever has been given to you as per the checklist. But as an auditor, being on other side of the table, I would just say there are certain things to which we do not have an access. For example, I can tell you, if we look at the books of accounts. So books of accounts are prepared in good faith by the statutory auditors. So that is a area wherein we do not have an access, or we are, maybe I can put it in this way, that we do not have that entire financial knowledge to understand each and every step or each and everything that they have done in the financials. So that has to be as per the accounting standards, and all the regulations applicable has to be followed. So in these certain matters, we can just maybe look out to the management that if they can give us a representation to specifically those areas where which we are auditing after almost, you can say, the entire financial year is over. So it is like an annual audit that we do post the 31st of March. So during the course, whatever has happened to which we do not have a direct access as an external, because auditors are necessarily required to be outsiders to the organization, and we have to audit it independently. So that is why we seek an kind of representation from the management. So Manjuree, you can come on your comments on the same.
So Aditi, as you said, yes, there are a few things which are not readily available for you to access. You can ask representations, but at times we feel that we have to give representations for like a few days, minutes back, we discussed whether the minutes have been signed off at the right time, or there is, or the data has been circulated, the notices have been circulated on the right time. So we get requests like that also to be put into the management letter. So yes, there are certain things which we can support you, but there are at times the requests which come in are very unreasonable also. So the right balance has to be maintained. And more than that, I would say that the disclosure requirements have become so strict right now under the new LODR regulations, that everything, whatever has to be disclosed, we are all, as compliance officers, we are already obligated to disclose to them on the stock exchanges. Even for, if you say that our quarterly results, our half yearly results, everything has been prepared and put up. So I feel that yes, you can, for your records, have some representations, but we have to be very reasonable in what we are being asked with. Because as it is with the disclosure requirements, we are already putting whatever, and I think on an average listed company in a quarter, not less than 50 to 60 disclosures we are doing to the stock exchanges. So if you compile and you look at all that, we have already disclosed, signed off by the MD, signed off by the in the limited review, and placed it. For at least for listed companies, this letter is taking things to the next level.
Just
No,
to add
absolutely,
to
Pradeep.
what Aditi, what you and Manjuree have said, just to add to that, by merely having a management representation letter, you are not gaining anything. Tomorrow, regulator, when he is asking you, as a secretarial auditor, you are not discharged your responsibilities or accountabilities. That point of time, this management representation letter, according to me, is only a piece of paper. Oh, yes, you rightly said that certain everything you may not be able to do it. Say, for example, the company has placed the name boards at all its branch offices and that kind of stuff. You may not be able to do it. There, a benefit of doubt will be given certainly to you, but not everywhere. Number one. Number two, I have said this in several forums. As a secretarial auditor, what exactly you have to do while you are discharging your responsibilities? In fact, when I joined my chartered accountancy on the first week itself, I have been told by my principal that when you go for an audit, you have to see through your ears and you have to listen through your eyes. I was confused at that time, okay, through my ears and through my eyes means what the client is showing you, don't see that only. Go beyond that. Similarly, what client is telling you, don't hear that only. Go beyond that. That means what? When you are going for a secretarial audit, as Manjuree has rightly said that the listed entities have to disseminate a lot of information. So the exchanges, the websites of the companies having a repository of the information during that financial year. So the secretarial auditor has to do his homework before he is going for the audit and asking that already what is available in the public domain. If you are again asking the company to give you that information and taking that as the face value, it is not correct. So in fact, suppose if I am the on the other side of the thing, suppose if I am the company secretary in service, I will assess your performance that when you come to my to my company for audit, how well you prepared are. And similarly, we know that very well, unlike statutory auditors, our appointment is not for a period of 5 years at one go. It is an year-to-year based renewal. So we are appointing you only for 1 year. So it is the responsibility of the company secretaries who are in service also. When I'm looking for a strong secretarial auditor, one of the parameters I will see is that how well the auditor is prepared before he is stepping into my company to conduct the audit. Aditi, this is also one message to you. Please ensure that your team is well prepared before you are.
And I would add to what Sir said is that we also look at you for guidance, because you have audited so many companies. So you are much more aware of what could be the risk, not now going forward. So rather we would say that we should get a good checklist from you, which will prepare us for the coming audits also. And it should come to us on a, not at the end of the year, but during the course of the year, so that when you come, we are able to say that, yes, you've done a great job. You have
Exactly.
provided us with all the right support. And here we are happy to share our, this report with you, so that, you can tell us where we can become better. See, there is no point of doing post-mortem after the end of the year. You have been appointed. It is the board who appoints you in the beginning of the year. You will come for the audit at the end of the year. That is a different thing. But during this 8 to 9 months, if we get the right support and the right guidance, then if we miss, we are also like too many things coming up. Management is also expecting us to be always at the helm of things. So we expect that you would guide us and tell us where we should maintain caution and what are the things we should do it and what are the timelines also. So if you do that, then obviously your job as secretarial auditors at the end of the year will be very simple.
In fact, Manjuree, just to add to that, I have said that what as a secretarial auditor has to do it at the same point of time. As a corporate secretary, what we can also do is that I can share my experience in Reliance. What we used to do was that we used to prepare the quarterly, what's called as files of keeping that, because in my listed entity in RIL as such, we used to have a quarterly audit, and for other companies we used to have half yearly audits. So what we used to do was, before we call the secretarial auditor, we used to keep the files ready, every information is there in that, so that it should be self-explanatory. That means the secretarial auditor should be able to conduct based on the documents we are giving it. Maybe 10-15% only. It's not like that, by that everything he has to ask, then only I will produce that. It is wasted of both sides, the time, the precious time will be wasted in that. So what Albert, my piece of advice to the participants is that whenever a secretarial audit is going to take place, if you are the PCS firm, please go prepared. See the website of the stock exchanges, see the websites of the company. At the same point of time, keep your ears and eyes open as far as the media is concerned, and if anything is happening in your client company. And at the same point of time, if you are the corporate secretary, before you invite the audit to conduct the audit, keep the files ready. You as a company secretary know that what exactly is the auditor is looking into. Keep the things ready so that that the audit will happen within no time. Otherwise, what happened is it may take months together or days together. The audit is going on, frustrating both sides. Yeah. Yeah. Go ahead, Aditi.
Okay, so I think we put it very nicely. So this battle goes on, but yes, as regards, I would just tell one thing as regards letting know of the compliances well before. So no, we are also bound by certain scope and everything. So like auditing around the entire year becomes a kind of task. But yes, as far as possible, definitely as auditors, we also want to guide so that no non-compliances are seen in the auditees company side. Okay, so we'll now go to the annual secretarial compliance report. So annual secretarial compliance report is just a germination of regulation 24A, and the relevant law is only SEBI LODR, and it has no mention of it in the Companies Act. So just to give a brief of the scope that is followed in this report. So since a lot of discussions has already happened that if there is a MR3, why again a ACSR? So basically the reason behind the intention, or rather the intention of SEBI to have this report in place is, as we just now discussed, there are a lot of kind of intimations that we are doing to stock exchanges. So in a way, the stock exchange or the authority has a database of all the non-compliances that are listed entities actually doing. So we have this additional responsibility of bringing into light that once again in front of the management. So when this report goes to the board of directors, they are also in a position to understand where they have gone wrong. Because we might well feel that we might not give out a non-compliance or we get into settlements. But on the other hand, SEBI there as the authority, he has a list or the database of all the non-compliances that is taking place. So therefore, this ACS report is very specific to only the SEBI regulations and circulars. And one important thing that this report focuses on is of the previous year's non-compliances. When we talk about a secretarial audit, it is very, very specific to the period during review. So it is for a one financial year, supposedly 2022-23. But when we do the ACS report, it is for the financial year 22-23 vis-a-vis what has been done in 21-22. That is, the non-compliances which was reported in the previous years also needs to be taken care of in this report. So applicability is, it is to the equity listed entities and high value debt listed entities. Format has undergone a change for this current financial year onwards. So previously it was something which was not very exhaustive. Now when we go through the format, we'll be in a better position to understand. So then coming to inclusion in the annual report. So we know that annual report is something which is out of Companies Act, and therefore this report need not form a part of the annual report. It is only an intimation that has to be given to the stock exchange, and it need not to be included in the annual report as such. Then timelines for submission is within 60 days from the end of financial year, and who can furnish. So it has to be a peer-reviewed practicing company secretary. So now why the focus on peer-reviewed company secretary is when the audit firm itself is undergoing an audit. So they also have their documentations in place. So it gives an additional responsibility on the PCS when a peer-reviewed firm is actually giving out this report. So now maybe we can go through few of the sources through which we can get to see the compliances. I think most of it has been previously discussed. If we see the certificate, with Manjuree very rightly pointed out about the compliance certificate, which is placed before the board. So there is a compliance certificate which needs to be placed before the board, which gives a detailed, detailed report of all the laws that is applicable. So that can be checked. Minutes is obviously like the, it's like the Gita for us. So we get to know about a company from the minutes only. So the minutes of the board, the committees and the shareholders meetings, then the terms of reference of the committees. So even in the previous LODR masterclass that we had focused on what is the importance of the committees. So the importance of committees are also growing day by day, because there are certain things which has to be necessarily rooted only through those committees. So the terms of reference can be checked of those committees, then the certificates. The directors' disclosures also become important. We have to see whether particularly the disclosures with regards to the PIT regulations or their change in interest of directors during the year, if that has been given. Then an updated list of related parties. I think a lot has been spoken about the related parties adjudication order that has been received of late, wherein the secretarial auditor, the statutory auditor, all have been penalized because they were not in a position or they have not identified the related parties. So it is very important for us to have an updated list of related parties and go through all the transactions that the company is entering into with them. And also additionally to check if the proper approvals for the same transactions have taken place or not. So now structured digital database, I think, yes, again, on the auditee side, I can tell you this was a kind of a huge thing that had come in for the financial year 22-23, where we as an auditor have faced a lot of issues because there were understanding barriers, there were no clarity regarding it. But of course, as on date, everybody is on the same page, and we know that there has to be a SDD for the listed entities. And so we have to go through, we take a virtual walk through that STD, whether all the UPSIs have been captured or not. Then the codes and policies which are not available on website needs to be taken. Then documents of previous years as per the preservation policy, relevant confirmations from the company. So for this particular ASCR, so one thing to focus is most of the things that we report in this annual secretarial compliance report are available in the public domain itself. So when we talk about an annual report for the listed entity, it becomes mandatory for them to have their annual reports hosted on the website. So the website of the company is one-stop place where we can get almost all the compliances that we want to look at. So it has become mandatory for all the listed entities to have a functional website, and they have to host a kind of plethora of things in that website from where the auditor can also pull out the documents that is required. Then, of course, is the stock exchange disclosures and intimations that is available in the NSE and BSE. And once we get to know the name of the company, we are in a position to kind of see what are the disclosures and the intimations and the timelines, whether it has been followed or not. Then the penalties imposed by BSE and NSE and SEBI. So this is something which is again hosted in the website. So as an auditor, I think these are the places, or these are the documents which should be specifically relied upon, because even if the company is not in a position to disclose, or the company says that probably we have not been penalized, maybe to cross verify what the company is saying, just to be in the line with what we want to do, this is the place where we can find all of these compliances, and website of the company holds the utmost importance, where we can get through almost all the things that is required. So now moving on to the format of the annual secretarial compliance report. So as we've already discussed that it is only specific to SEBI LODR. So first, and it is not only, it is germinating out of SEBI LODR, but to note here, it is not only taking into consideration SEBI LODR regulations, it does take into account all of the other acts also which might get applicable. For example, if a listed company has done a buyback of securities, so accordingly, the SEBI buyback regulations becomes applicable. So a prohibition of insider trading regulations become applicable. So all of these have to be taken care of. Now moving on specifically to the format, that this is the new format which has been given for the financial year 22-23. So as we know, we've been deliberating on the importance of secretarial standards, and here it is as the first point, which itself shows why secretarial standards are important. So when we go back to the MR3 or the secretarial audit report, we are giving a declaration that we are complying with the secretarial standards. The same thing has been followed by SEBI also, that we will have to give a declaration very specifically about the secretarial standards being in place. So as an auditor, I would reach out, or I would say the auditee company where we feel that maybe a numbering has been missed or a summary has not been announced by the chairman during a VC meeting. We might feel that these are very little compliances which need not be maybe qualified in a report. But again, when we go back to a ASCR for a listed entity, we have to give a compliance status. So it can be either a yes or no. For secretarial standards, NA is obviously not applicable because 118 makes it mandatory for all companies to, to follow the secretarial standards.
Yeah, just 1 minute, Aditi. Since you touched upon my what's called a soft nerve, whenever I talk about secretarial standards, I became very passionate and emotional. The reason being, I am associated with this right from 2016 with the SSB board. At that point of time onwards, I used to say that if the best installation for a company secretary as a KMP as well as the board of directors are concerned, in comparison to the Companies Act 2013, the responsibilities and accountabilities which have been entrusted upon the directors as well as the company secretary. Because SS1 and 2 are more of procedural oriented. So people used to have a difficulty in compliance with the procedure, like taking attendance sheets, like, keeping the reports and all these things. Whereas, in fact, by having all these things, it is bringing a kind of discipline into the secretarial department. Prior to SS1, in fact, the company secretaries used to struggle to put the agenda in place and circulate it before to the directors. Even one night before they used to push it to the directors, the company secretaries used to struggle a lot because the other departments were not cooperating with them. That kind of a situation used to be there. Whereas now it is mandatory for the company secretaries to circulate the agenda 7 days before the board meeting. In view of that, a kind of a discipline has been brought in the companies and all even across the departments wherever they want any kind of board approvals, they have to give the board notes and the information to the secretarial department much before that. At the same point of time, if I am a director and if I'm suppose I'm asking for the minutes of the previous meetings before my induction as a director, I mean my appointment as a director, or after my cessation as a director. When the company secretary has been asked by the management, are we duty bound to provide the minutes? Because the law was not clear. So the company secretary was also not very clear whether how to advise the management, whether the director has a legal right to ask for the minutes, certified copy of the minutes, or even the inspection of the minutes. The law was not clear. Now, after SS1 has come, I have been appointed as a director on your board today. I can see the minutes of I can inspect the minutes of the company right from its inception. If I'm ceased to be a director, still I can ask for the inspection of the minutes as well as the certified copies during my tenure as a director of the company. So there are n number of benefits out there. These things, the regulator is more intelligent than us. They know that, okay, secretarial, the importance of the secretarial standards. That's why right from the beginning, the amount of importance, what they have given, our fraternity given according to me. But of course, of late, we are falling in line because as I told you in MR3, it is there. Now in the secretarial compliance report also, it has been brought in. So you have no option but to fall in line. We have to comply with the standards. And of course, at the end of the day, it is according to me for the benefit of the company secretaries only. Okay. Whether you have to give a serial number to every meeting, but similarly, you have to what's called as an okay, the page numbering is to be there. After the chairman signs, you have to put the date, you have to put the place. Earlier, even the chairmans were not signing, and in the company secretaries, what they were doing is they used to put the date with a different pen. In fact, now if you do that, the ROC may say this is that the chairman has not done, so it is a non-compliance. You don't know. So these are all certain fine points which company secretaries have to understand that. And also to sensitize the both managements like your CFO, CEOs, directors, whatever anybody has to do it, they have to do it. There is no other option. Yeah, go ahead.
Sir, so if I can add here also, as you rightly said, so one of the experiences that we've had that the agenda point which you just now mentioned. So in fact, we've come across situations where the secretarial department actually reaches out to us, saying that you knowingly put it as an observation so that we are able to put it to the management that yes, this has become that important. Because there are situations we as auditors also understand that they are not able to persuade the management of why it has to be done. So in fact, secretarial standards has also formed a part of our observation when we've issued reports.
In fact, as you rightly say, Aditi, when the secretarial certificates, when the secretarial standards was introduced and the things, we used to call the secretarial auditor to be present in the board meeting. And we wanted to board of director to hear from him, apart from what he has put in his report, what other things he has got the observations, what other things he has seen, what is the suggestions he has got. We used to make the director to listen from him directly. Initially, we were doing that.
So the next point is adoption and timely updation of the policies. So I think we've also dwelt upon this fact, how important policies are becoming day by day. So for example, materiality of related parties. Now that has become very important, and every day we see new changes coming into those regulations. So we need to have a specific policy for that, as well as preservation policy or the CSR policy. So we have to check in detail whether the required approvals have been given by respective committees, the same has been approved by the board or not. Then website maintenance and disclosures on the website, be it a listed company or a debt listed company for that matter, equity or debt. So they have separate regulations wanting them to have these certain information which has to be there in the website, and accordingly timely dissemination of that has to be done under a separate section. So that is also checked, and if at all we find something as missing, then we kind of advise the management to have that uploaded on time. So disqualification of directors, then none of the directors are disqualified is what we have to certify. Details related to subsidiaries of listed entities have been examined. So this is completely a duplication, or we may say a copy of Regulation 24, which we right now discussed. So we need to identify which are the material subsidiaries, and accordingly we will have to check whether all the compliances relating to that has been done or not. Then preservation of documents again has become mandatory, and we as a listed entity, you need to have a preservation policy in place, and that again has to find itself in the website of the company. Performance evaluation. So I think performance evaluation of the board is very important. So in order to understand whether the board of directors are actually functioning in the right direction or not, so it is kind of evaluation being done to the board, independent directors and the committees at the start of every financial year. So that also has to be checked whether this has been done or not. Then related party transactions, as we discussed, there are certain so listed companies have to prior they have to go to the audit committee to seek the approvals. So whether that listed entity has taken the requisite approvals or not, and then what are the details, and they have to quantify. There is a statement of related party transactions that has to be placed before the audit as well as the board. Then quantification of those transactions. So all of these have to be checked. Then disclosure of events or information. So this is Regulation 30, wherein we have to give an intimation to the stock exchange. So whether all of these intimations, if at all, when we go through the minutes of an company, we get to see there are certain events that has occurred. So we have to cross check whether the requisite intimation has gone out to the stock exchanges or not. Then prohibition of insider trading. So probably as an auditor, I would say this was one point that we could reach out to when the auditor, when the auditee was of an opinion that this is not applicable, or probably we were not aware of. So this was one point where we focused as auditors, that SEBI has mandatorily brought up this point in the report, wherein we have to disclose the compliance status as regards to the PIT regulations. Similarly, the actions taken by SEBI or stock exchange. So as discussed earlier, we should not be only depending on what the auditee company is giving us with. We have this SEBI website wherein these penalties and the fines imposed by them are recorded. And so we can refer back to those actions taken, and that has to be again given in this report. And the additional non-compliances, if any. So what I feel in the 11 points that has been covered, so most of the important compliances which is required for a listed entity has been covered. So apart from these 11 points, even if we come across any additional non-compliances, that has to be again reported. So now this is which is compliances relating to the appointment or reappointment of auditors of the listed entities and their material subsidiaries. So when it comes to auditor, again, I will come across one of the experiences that we have had. So appointment of auditor is something which is very clearly mentioned in the Act, and as a listed entity, rotation of statutory auditors becomes mandatory. So a lot of times it so happens that there is a casual vacancy during the period of 5 years, but then we have to consider that as one tenure. So, so these are the few questions and answers that needs to be done during a period during the audit, or maybe when we are issuing this report. So that might be the intent, because of which this specific auditor related compliances have also formed a part of this report. So if an auditor has resigned within 45 days, then a limited review has to be given. If they are resigning after 45 days, then for the next quarter, the reports have to be given. So all of that with regards to casual vacancies or a change in position of the auditor has to be reported. Now coming to a few points which has now been included. So in 2019, when the format had come in for this annual secretarial compliance, it was not so exhaustive. It was kind of very much limited to the non-compliances that had happened in the last year that we were reporting, and it was very much restricted to few of the things as compared to the one which we are seeing now. So there are three, four sections which have been newly added. For example, there is a fine amount. There is a type of action that the listed entity is taking when they are deviating from the compliances that is required to be done. Then there is an observation or remarks of the practicing company secretary and the management response to that. So here also I can just say maybe there are certain situations wherein it is beyond the listed companies control that they are being non-compliant. For example, mostly if we take into account government companies. So in government companies, it is usually not the board who has the authority to appoint directors. So most of the board composition in government companies is either short of an independent director or that of a woman director. So in these cases, it is actually not the management or the auditee company's fault, but then in the management response, we can take a note of that, of the actual condition as to why the board composition is not correct. So along with that, we will have to provide a list of all the observations in the report for the previous year, along with the actions taken by the listed entity. Now this we have just discussed upon all this, the existing tables which the new additions that has come up in the annual secretarial compliance report. It is the type of action, the fine amount, and the management response. Any deviation which is found from the compliances, that has to be necessarily reported in the annual secretarial compliance report. Now coming to the amendment, so post this amendment that has recently come in, previously it was only the PDF copy of the ASCR which was required to be filed. So now they've made it mandatory to be filed in the XBRL mode as well. So for the current year, it was the due date was June 30th, 2023, and for the upcoming years, it would be 15th of June 15th of June henceforth, for which it is going to be applicable. So now we can take a few case laws in which we can understand the importance of the secretarial standards that we were focusing, or the role and responsibilities of the secretarial auditor on the whole. Sir, would you like to take it, case-wise, how? So if we refer to this one as case 1, that is the ROC of Delhi and Haryana, we have come across penalties. So this was an order of 19 January 2022. In the matter of Polaris India Private Limited. So we, as the company had not kind of followed the secretarial standards, we were kind of discussing on the secretarial standards at large. So the penalties are also not very less if we look at the amount. So it is kind of huge penalties which is being levied for non-compliance of secretarial standards. So the company and all the officers in default, even the past director who had been in default during that course of action, was penalized because of the non-compliance with regards to secretarial standards. So similarly, we have other cases as well. The ROC Pune has also taken a stricter view of non-compliance of secretarial standards with regards to clause 7.14 when there was a non-compliance. So that was also penalty was levied by the ROC Pune. So that also was a heavy amount, like 45,000 was penalized to the officers in default and the directors each. So similarly, we have quoted, we are running through a few cases wherein case studies wherein the secretarial standards and the role of the auditors to bring in to light these non-compliances is growing in importance day by day. So, so this is like different ROCs. What we've covered here is there are different ROCs. First was the ROC Delhi, then was the ROC Pune, now is ROC Chennai. So all the ROCs are taking into consideration the importance of the secretarial standards, and they are penalizing the company under different clauses of the secretarial standard 1 or 2 as is the non-compliance prevailing. So that's all from my side. Thank you everyone for your patient hearing.
Wonderful, Aditi. Very nicely you have done the presentation and very precisely you have covered and brought in all the aspects. Very nice. Just to go back to one slide back.
So.
This particular case of Madras fertilizers, we are talked in the past also. I again tend to emphasize on this particular case. This is relating to gift distribution done at the AGM by the Madras Fertilizers Company Limited. Initially, the ROC has actually penalized company and the director, and the fine was very heavy, and they made an appeal and went to the RD. When RD was reviewing the case, we categorically said it is the responsibility of the company secretary and the company secretary alone to ensure the secretarial compliance, which is required as per the secretarial standard. So in which case, what he has done is he has set out the whole order against the penalty levied upon the company and the director. He has issued instruction to the adjudication officer to initiate separate proceeding only against the company secretary and conduct the case. So here he has referred actually the secretarial standard, he has referred the guidance code, he has said what is the role of the company secretary. That really a very highlighting case showing the importance of the company secretary, what we are all supposed to do. And again, needless to mention, Mr. Sudhakar has been repeatedly saying in every seminar about the importance of the secretarial standard and the guidance note, etc., which we have to take care of it. That is the only point I want to add at this juncture. I think we can take the questions now. I think we left it with the material subsidiary.
Aditi, you may stop sharing your.
Yes.
Yeah. Whatever listed entity, foreign subsidy, the minutes are not placed in the listed entity because the law and act are different. How they will follow their local laws and acts need not be given in the proper formats and maintaining are different. In this case, how we can consider unlisted foreign subsidiary? Please comment on this.
Let me take it in this manner, that it is your unlisted foreign subsidiary. So when it is your obligation to follow the listing agreement. So whenever you are incorporating a subsidiary in any foreign location, you have to understand not only their laws, you have to also see how you will implement or you will ensure that your governance is done for that listed subsidiary. So you will follow, you will make everything according to that country's law, as well as ensure that whatever governance you need to do for the under the Indian regulations, that are also followed. Because finally it comes and gets consolidated in India. So we have to ensure that governance is maintained at any cost wherever the location of the company is. Till the time it is a part of your group, governance has to be done as per the regulations which are followed in India. So practical difficulties cannot be a reason for which governance is not done.
I agree with you. If borrowing of the private limited company as on 31/3/23 is more than 100 crores, secretarial auditor is applicable for the year 22/23 or 23/24, since the wording of the section says capital turnover borrowing existing on the date of the latest audited financial statement that has to be taken into account. Yeah, it is actually, when you say 31/3/23, that means the latest audited balance sheet is actually 22/23. So if it is 22/23, based on that, because once the audit is get over, then only you'll know. So in which case it will be applicable in the subsequent year, because based on the previous year. Generally, I note that the secretarial auditor appointment and the audit report is placed only at the board meeting. Should the secretarial auditor appointment and audit process be the report of the routed through the audit committee first before it is recommended to the board? Secondly, I am informed in some of the cases the secretarial auditor performs the audit remotely without even visiting the office. Is this acceptable?
Sir, I would like to answer this question. So first part of the question is, again, I will tell you it's a gray area, because when we look at the functions of the audit committee, there it has been mentioned as appointment of auditors. So we as auditors, we always want that it is to be routed. So in a lot of cases, we are of an opinion that it should be routed through the audit committee. And since it is like auditing of all the records of an organization, it should be routed. But then again, sir, you can give your comments on that, because we as auditors, we feel that it should be routed through the audit committee, the appointment.
Okay, thank you. No, before this program, actually, I did a quick survey to find out the practices in about 5-6 companies that I was aware of. At least 3 of them said that they don't do it. They do it directly at the board. Because I think if there is any qualification, then it has to be addressed in the board's report. The second aspect, the 2 other companies said they always route it through the audit committee, irrespective of the fact that it is an annual exercise. And the terms of reference does not specifically talk about it. But my point basically to all of you is that the cost audit comes to the audit committee, the statutory auditor comes to the audit committee, the internal auditor comes to the audit committee. So why should the secretarial audit be excluded just because it is not specified there? The role of the audit committee, if you look at it in terms of reference, it talks about compliance and legal, your regulations, everything. It goes through the audit committee first, and then only it goes to the board. I agree that the board will not recommend anything in this case, but at least the board will not have the time to actually look at how the appointment is made. The internal auditor is also appointed by the board. The statutory auditor is appointed by the members, but still it goes through the process. Now, somebody told me that the secretarial auditor does not have any engagement with the audit committee. Now, I think that is a very weak argument, because it is true that just because you are having an engagement every quarter, it should go through the audit committee. But if you don't have an engagement every quarter, then you don't go through the audit committee. I think that's a very weak argument. From my perspective, if you want good governance, we have to look at the spirit of the law. And it is not practically possible to look at every situation. There are many times when the board has to take a decision and still the management believes, let us take it through the audit committee, at least one of the committees. I'm not saying more than one committee. So I think from my perspective, it is important for any audit to go through the audit committee, especially when it relates to compliance and things like that, because that is primarily the responsibility of the audit committee to oversee, because after all, the role of the audit committee is oversight, right? So unless, and the board will not have that much time, because if you're looking at strategy and many other things, mergers, acquisitions, the big ticket items, why should the board get into the process? Now, the second part of my question is, the PCS that you mentioned, in the two cases, I was told that they do remotely. I mean, every document is sent through email. That person has never visited the office, never interacted with other management personnel. So my question was actually around it to say, I mean, I'm not saying that the guy has to come everywhere, but at least should there not be one meeting with the management other than the secretarial, other than the company secretary? And what is your experience? I mean, when you do secretarial audit, when you're appointed, you have at least one meeting, even if not physically, do you do it virtually?
Right, that's exactly what I was coming to. So see, we have all gone through the COVID phase, which has made us believe in the virtual presence. Right. So it is, I would say, prior to the COVID phase, it was all physical audits only which was being conducted. So that was the way how it was. Nobody actually knew of sharing of documents over emails and all of that. So there was a physical audit which was being conducted. But as you said, definitely when we are onboarded by an management of a company to conduct their audit, it becomes the utmost responsibility to have a preliminary introductory meeting with them to understand their operations. Because until and unless we get a proper background of the company for whom we are auditing, then probably we are missing out on a lot of compliances that might get applicable to it.
Yes.
So, so it becomes very important that we have a preliminary meeting with them, probably their entire team with whom we are going to be coordinating in the due course of time. Similarly, an introduction of the head auditor and the audit team also, who is going to perform the audit or conduct the audit. And then we take it ahead as per the convenience of the audit committee. If they prefer sharing it over the mail or having a V-transfer, whatever is the mode. If they prefer an electronic transfer, that is also agreed. And if they want a physical audit or physical presence in the office, so that is again mutually agreed.
Oh, that's fine.
May I actually go one step ahead?
Yes.
I will actually think widely. If the statutory auditor appointment is subject to the shareholders' approval, why not the secretarial auditor's appointment also subject to be a shareholders' approval? Why differently we are treating?
Sir, there are geographies which have taken this, and in Bangladesh, I know of, the secretarial auditor is appointed by the shareholders.
Okay.
So this is already, it is how it is taken as, but that's, and I would also like to add one thing is, what we have been discussing also is limited review is also done by our statutory auditors. Secretarial auditors also should actually start conducting reviews, if not quarterly, at least 6 monthly, so that at the end of the time when the report has to be done, everything does not just pile up. So we should also consider this as a good governance practice if limited review of secretarial audit reporters can also be done.
Yeah,
I will ask actually Sudhakar. Sudhakar, what is your view actually? Why not the secretarial auditor should be appointed by the shareholders of the company?
This particular thing was discussed at the, ministry level while Companies Act 2013 was there. So, though the proposal was there, it was felt that this is not the right time for the, to put it to the shareholders. No reason, rhyme or reason for that, but recently as the SSB board, we have given some good practices for the audit committee. In that, we have recommended that the secretarial auditor's appointment is to be routed through audit committee. But as on date, it is not mandatory.
Yeah, I also widely think, because when you talk about the auditor, let it be the cost auditor, let it be the internal auditor, let it be the secretarial auditor. Auditor is the auditor, everybody should have the same way discrimination. Anyway, today law stands this way only. But as Manjuree puts it, in Bangladesh, it is subject to the shareholders' approval. It's a very good practice, I would say, really speaking. Yeah. And let me go through the next thing. One practical question. Can a subsidiary company write in their letterhead as the XY is limited, into bracket, and ABC group holding company? I don't know what to answer is, because I have not seen any such letterhead, etc. I have seen people saying that this is the company and they write in which group they are, that they normally write.
A group company of XYZ.
I know RPT has been done many times earlier, but one small doubt is there. Kindly clarify in time permits. When subsidiary of the RPT where listed company is not a party, more than 10% of the standalone turnover requires audit committee approval listed company. So is this criteria the RPT with a related parties or with a single related party when it exceeds the threshold?
Even if it is a single related party, when it exceeds the threshold, it requires the audit committee approval of the listed entity.
Okay. There is a suggestion has come actually. He says that, sir, one more request. As you are successfully conducting the webinar series of the PIT and also conducting LODR, why not you kindly conduct on SAST regulations? I
Yeah,
think
we will take.
substantial acquisition, substantial acquisition takeover, I think. Yeah.
We will do that at appropriate time.
Okay.
Certainly, we will do that.
Nice presentation, wonderful presentation. Can secretarial auditor file and certify various e-forms in ROC? Aditi, can the secretarial auditor certify various e-forms in ROC? That's what he is asking.
So, sir, here again the corporate governance norms comes in. So, what should be done is basically a firm can do it, but not the secretarial auditor. By a firm, what I mean is if we are following a Chinese wall policy wherein teams are not intersecting with each other. So in that case, the form like certification of the forms can be done, and the secretarial audit team is quite different from the ones who are certifying the form.
The company has actually filed a SSP with the prescribed time, but based on the query from the stock exchange regarding some reclassification, it files the revised SSP post to the prescribed form is already over. Is it the matter of reporting the ACR for the delay of filing the SSP?
I don't think it is so, because that company is not listed by that time. So hence, SCR is not applicable to that at all. Okay, it is still in the process of listing stage only.
Correct. ACR
Right, not even listing. It is not even listing. It is at the IPO stage.
Yeah, correct. Because the SCR comes into play only when the company becomes listed company.
Sir, I'm being unmuted. Can I talk for a...
Yeah, sure.
Yeah, thanks, sir. Actually, sir, my answer I was not getting. We have just put in money in our one of a company, and they are becoming our subsidiary actually, and they are struggling with the establishment of brands and all. But they are actually in a letterheads and all. They are willing to write our name while they are establishing their brand, and they are giving to any agencies. They are putting our brand as a group company. That is why I was specifically asked. So I have said, as for law, they can write an associate company, but group company, they are putting my company name as a group company name. So will there be right in doing this?
The letterhead of the company is also governed by the Companies Act. You cannot have letterhead the way you want to have it. So you have to have the bare minimum, whatever the requirements are there, comply with that. After that, over and above, you can do whatever you feel like as far as the branding is concerned. But this group company concept, that is only there, but you cannot, to the best of my knowledge, you cannot bring the group concept company, aspect on the letterhead of the company at least.
Thank you. Thank you, sir.
Why secretarial auditor is not certifying the forms? Because by certifying, he can audit the forms and can see all the compliances of that level and appropriate time. Somebody is saying that.
It is the conflict of interest, nothing else. It is a conflict of interest. That's why they should not do it.
Yeah, correct. According to me, it should not be actually, as Aditi puts it, if the company is having a Chinese wall concept, the teams are different. A different team can do, but auditing person should not. That's what I also feel strongly. I think that is all the questions I have. Nothing else is there. I think it is, we are already at 1 ton. Still, I can see more than 100 people are all there. That
Yeah.
shows,
So,
yes, Sudhakar.
but before we conclude, Bala, let me say that next week being Choti Diwali, we don't have the webinar on that day, and we will have the next webinar on 18th only. Okay, and we will continue with the master class, and the flyer will be circulated in appropriate time. And thanks very much, Manjuree, once again for your gracious presence in our webinar, and I'm sure that in future also at an appropriate time, we will invite you and you will accept our invite at that point of time.
Thank you so much, sir. It's
And
my pleasure.
Aditi, it is an excellent presentation, and your experience of your thank you. So Aditi, your experience of your secretarial audits and compliance report, it is very much visible, and it is an excellent presentation once again, and I'm sure the participants got benefited. Thanks very much, Bala, for your moderation, and thanks each and every participant. Okay, that for your presence, and thank you and goodbye. God bless you all. Thank you.
Thanks a lot to everybody. I wish you all well in advance our Diwali greetings to you. Have a great time. Have a good festival. We meet after Diwali. Thank you.
Thank you, everyone.
Thank you.